I'm Yahoo Finance Executive Editor Brian Saza, and you're taking a look at a live shot of the opening bells on Wall Street on this Friday morning. FIFA and DAZN ringing the bell at the New York Stock Exchange. Diverse representation, which is the founder of the National Black Women in Sports Day, is getting things going over at the NASDAQ. Investors have had their fair share of things to digest this week, to say the very least. The tariff man has returned in force, yet companies such as Delta and Levi's are offering up good outlooks and not warning that business is completely falling off a cliff. Where are those recession shock callers on Wall Street now? They're probably on their yachts. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging to what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's get a quick check on the major averages as we kick off the trading day and send it to our very own Allie Canal in the Yahoo Finance newsroom.
Hi, Brian. Well, let's kick off with the major averages. Right now, we're dropping from those record highs. This comes amid the latest tariff threats from the president, but it is worth noting that the S&P 500 index, that's clinched 5 record highs in the last 9 trading sessions. I also want to stick with those record highs and get a check on Bitcoin, the digital token rallying toward the $120,000 mark, and earlier topped $118,000 per token. If we round things out with crypto-linked stocks, you're going to see that shares are on the move. You're seeing that play out with names like Coinbase, Riot, Strategy, Marathon, and more. And with that, I'll send it back to you, Brian.
All right, thanks so much, Allie. Now we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, the tariff man is back. President Trump has been on a tariff tear these past few days, outlining new rates and letters to world leaders. The latest, a potential 35% tariff on Canada. The new deadline to watch is now August 1st. So are we kicking the can down the road, or are deals really possible? Regardless, investors don't really seem to care, which brings me to point number 2, market euphoria. The S&P 500 and the NASDAQ reached new all-time highs on Thursday. Even with markets in digestion mode today, the reality is it looks like investors have tariff fatigue. Great new call out on this morning. A new report from B of A showed that clients aren't remotely worried about economic risks or more inflated stock valuations. Not exactly great. Number 3, just a few days removed from getting earnings reports from important economic bellwethers like JP Morgan and Netflix, the market has gotten a taste as to what could lie ahead. That is, well-received second quarter earnings beats, solid guidance, and not so many gloomy earnings call commentary shout-outs. Levi's checked these boxes with its earnings last night and raised its full-year sales outlook. This on the heels of an upbeat earnings report from Delta on Thursday. Lots going on, as you can see today. Let's bring in our roundtable. Larry Tenterelli, Blue Chip Daily Trend Report Chief Technical Strategist. Steve Sosnick, Interactive Brokers Chief Strategist. And our Senior Business Reporter, Inez Ferre. Good to see you all. Steve, I'm coming to you out of the blocks here. The tariff man has returned. The market has snoozed. Who's right and who's wrong, the bulls or the bears? Because the market can't keep going up in a straight line like this as we get these tariff headlines.
Well, good morning, Brian. I would say the bulls were right pretty much since April. And now I think at some point they're getting a bit ahead of their skis. And I think it was interesting to see the markets react negatively to tariff news overnight. And that's continuing this morning. I happened to be out at the Yankee game last night with a friend of mine who manages money. And the news broke. We both looked at our phones and said, you know what? The futures will be flat by the time we wake up in the morning. And that actually didn't happen today. I think the market, we've gotten to a point now where the buy the dip mentality is so strong that every dip is seen as a buying opportunity. And actually at this point, people are reluctant to even sell to therefore create a buyable dip. And secondly, as long as there's any sort of plausible wiggle room regarding tariffs, the market has chosen not to respond to it. And so I think we've gotten a bit ahead of ourselves at this point in those regards.
Is one of you giving yourself some time to have some fun? I thought you were just glued to these trading screens all day.
No, ball games are always there.
All right, fair enough. Larry, let me get over to you because you're our technical guy here on this roundtable. Any signs of exhaustion you're seeing in the stocks that have led this advance?
Good morning, Brian. Not really at all. We've got strong breakouts across the board. It's not just technology, it's industrials, it's financials, it's the nuclear sector. So the weekly trends on the S&P and the NASDAQ are very, very strong. Some of the stocks, JP Morgan, the banks, Goldman Sachs, they got a little bit extended. Some of the cybersecurity stocks like CrowdStrike are correcting right now. But after these really big moves, we should expect to see some healthy consolidation, but nothing that I see changing the longer-term trend.
Larry, I mentioned at the top of the show tariff fatigue. Why do you think stocks are shrugging off tariff headlines?
I think what stocks are seeing is that there's flexibility coming from the White House. Even though there's uncertainty, the White House has shown that there is some flexibility as far as what the tariff rates are going to be and that there can be some negotiation. So I think the markets have done a very good job of adjusting to the uncertainty.
And as I think I was talking to you on Monday, and Bitcoin was under 110,000, now ripping to a new record. This euphoria we're seeing in markets is definitely playing out in all things crypto.
Oh, most definitely. I mean, investors are risk on. And it's interesting that Bitcoin touched new highs around the time that also NVIDIA also touched the $4 trillion market cap. So there is now this correlation that's been alluded to again between tech and crypto. And there's just been so many catalysts over this year related to Bitcoin and to crypto in general. And there's more even next week with Crypto Week in Congress. So look, analysts are now looking at 120,000 as the next level and the next resistance level. We'll see. But certainly Bitcoin right now is up about more than 24% year to date. And gold also, by the way, is up more than 25% year to date. So you have investors that are fully risk on right now.
Steve, I imagine you were probably still studying markets as you were chewing down a $30 hot dog at the Yankee Stadium. But I also know you watch options closely. Now, you heard Larry talk about not seeing necessarily any signs of fatigue in the broader averages or some stocks that are leading. Have you seen investors start to position for some pullback in markets here as the summer goes along?
Frankly, not really. I think when you saw VIX with a 15 handle, that was one sign of the fact that investors were really not looking for any particular hedges. We have seen something we have seen a little bit of a steeper skew, meaning people greater willingness to pay for out of the money puts and that sort of protection than they were for at money options. But that's partially because the at money option volatilities are so low, which is, so I think that it's a little misleading in that regard. I think basically we've gotten very sanguine, and we really have not been seeing that in options. We see a lot of speculation in call options. There's certain stocks that have been on big runs have had relatively steep upside skews, meaning people are willing to pay up for calls. There's that FOMO element to it, if nobody wants to miss a rally. And plus, we do see sort of a steady speculation coming through ultra short-term options, the so-called zero-dated options. And those have led to a lot of intraday rallies. One thing to bear in mind, by the way, is today is a weekly expiration, so you actually effectively have 600 zero plus over 600 zero DTE options, so to speak, when all the 600 or so weekly equity options expire today. So that's one of the reasons you get sometimes have a little extra oomph on a Friday afternoon.
Steve, I was looking at a good B of A note this morning. They said the clients they were able to survey, they're ignoring valuations and not really thinking about economic risks. Now, when I read that, I'm like, well, maybe that's not so good for the market. When you hear stuff like that now start to pop up and circulate trading desks, where does your brain go?
Well, my brain is that there's always a sort of a continuum between fear and greed, and we are very much on the greedy end of the continuum right now. Fear has pretty much been abolished. I don't disagree with the comments in the B of A note. The other way that I would put it from a stock investing point of view is you kind of have a continuum between a disciplined analysis of future cash flows vis-a-vis a flight to crap. And I do think
flight to crap. I like that, Steve. That's really good. That's the type of big energy we need here on a Friday in markets. I appreciate you, man.
Figure got to throw out the good stuff for you, Brian.
Yeah.
But in general, I think I wouldn't say we're in the full-fledged flight to crap mode right now, but there's definitely heavy pockets of speculation. I could point, if we had enough time, we could point to all kinds of stocks that have had crazy runs in short periods of time because people have gotten in the mindset of seeking out situations that are moving rapidly. They're embracing high volume, high volatility without necessarily any regard for what's causing it. As long as it's moving, it seems to be tradable, and that kind of gets a frothy mode to it.
Larry, are you seeing, I guess, any surprising breakouts over the past week?
What I've seen is it looks like the home building group is starting to put in a bottom. There's been some nice outperformance in the home builders since July 1st. We did see on July 1st a very sharp rotation, a pullback in some of the momentum leaders, and a rotation into industries like healthcare, home builders. The industrial metals are acting very strong. Industrial metals is a very interesting group. So the XME ETF just broke out to a 14-year high. It's got copper, steel, aluminum, and I think that's a beneficiary of the tariffs.
And as we're on the cusp of really the start of earnings season, that's number 3 here for me. Delta's report was well received. You have Levi's out last night. That stock is getting a strong bid here this morning. You know, what's the vibe in markets on earnings? You think this could be the start of more positive reactions as these numbers start to hit the tape?
I do. I mean, as far as Levi's is concerned, their performance was strong abroad. I think the weak dollar also helped, and also their diversification of the supply chain of where they're making their goods. This has been very beneficial for this company. I think you're going to probably see other companies that have had their supply chain in China that have diversified, that you're going to see more of that, and you're going to see more positive commentary around that. And I also think that you are seeing some more clarity. I mean, just the fact that Delta reinstated their guidance when the airlines had pulled their guidance in the previous quarter, you're going to see now a lot more clarity, despite the fact that you still have uncertainty about where these tariffs are going to go come August 1st and whether they'll be pulled back or not. I think that the market is now used to the fact that, okay, there will be some level of tariffs, but we can work around this.
The most amazing thing, Steve, I learned on that Levi's earnings calls, well, actually, it's 2 things. One, apparently, jorts. Baggy male jorts are in right now. You got to check these things out, Steve. Maybe, I can't see you wearing them, or really, they're quite the image. But the other thing is, out of everything they said on this call, tariffs are only going to impact their business by about 2 cents this year. And that blew me away. I thought tariffs, Steve, were going to hammer corporate America, and these stocks were going to get hammered accordingly.
Well, I will tell you, I'm sure the baggy jorts will not pass the WAF.
Oh no, they look ridiculous. They're just not.
Yeah, that's not happening for me. Yeah. But you know, every company is going to be different, and I think Inez raised a very important point as we get into earnings season next week. Is a lot of companies got a pass last quarter. They basically threw their hands up and said, "We don't know," and you know, the market actually was fine with that. Now, we were deeply oversold when most of this was going on, so I think that was more of a matter of, you know, markets recovering from an oversold condition. And you know, I don't see them being able to do that this quarter. They're going to have to say something. Now, Delta, who was one of the companies who would.
Looks like we lost Steve momentarily. Larry, let me get over to you real quick before we head off to break. Are there key charts you're watching right now ahead of earnings the next 2 weeks that they might suggest they're on the cusp of a breakout? Because I think people were very surprised by Delta, and they were very, very surprised by Levi's.
Delta was very interesting in the market reaction. The airlines did set up very well yesterday. Delta and United both cleared the 200-day moving average. The key thing that I'm really watching right now is the big banks and brokers, JP Morgan, Goldman Sachs, Wells Fargo. They've broken out ahead of the market. They've been leaders. And I think the guidance from them is going to be very important for the next few weeks in the S&P 500. That's my main focus going into earnings, are the big banks.
All right, good stuff. All right, straight ahead, we have our stock of the week. Your clue, you are probably paying $8 a month for this. Welcome back to Opening Bid. Let's fire up a Spotify chart as I am locked in on that name today following some very bullish comments out of KeyBank analyst Justin Patterson. Patterson acknowledges FX swings, that's foreign exchange swings, may show up negatively on Spotify's July 29th earnings report, but he still sees the stock rising 20% because the music business is under monetized. Spotify could jack up prices even more, even though we all hope they don't, and the platform is dominating its space. All right, normally we do a stock of the day here on Opening Bid, but on this Friday we are cranking it up a few extra gears with stock of the week. I'm locked in on Netflix ahead of its July 17th earnings report. What has caught my attention is that the stock has been underperforming the broader market rally this month. Shares are down 5.5% in July, while the S&P 500 is up 1.7%. Judging by the Wall Street commentary out there, analysts aren't making too much of this trend divergence, though. Needham analyst Laura Martin is out today raising her target price on Netflix to $1,500 from $1,126. She says she remains impressed with Netflix's global scale and stable content spending. Jumping into the Yahoo Finance platform, you can see Martin isn't alone in her bullishness. The Street has hiked its 2025 EPS estimate on Netflix by 79 cents compared to just 90 days ago. They have also lifted their 2026 EPS estimate by 60 cents during that same time span. Still with me, my roundtable, Larry Tentarelli, Steve Sosnick, and Inez Ferre. Inez, I want to go to you here on Netflix out of the jump. Netflix, I can understand why these estimates have climbed. Really, for the better part of 2 years, Netflix has come out here and they have completely destroyed, crushed, hammered, however you want to put it, earnings estimates, and they have come out and raised guidance. I'm trying to think, why won't that happen again, given how popular the platform is?
Well, certainly you have a lot of Wall Street that believes that they can continue to outperform as a company. I mean, they've had their password share crackdown. They've had their ad tiers that has done very well. They're pushing into live sports. So there's a lot of reasons why the Street is bullish on the stock. You mentioned the sort of underperformance this week, but look, if you take a look at a year-to-date chart and you take a look at where it's come from the April lows, you have Seaport Global that noted this when they actually lowered their rating to neutral because they said it's a lot that's baked into the stock right now. And on a valuation standpoint, they're saying, let's just wait for management to execute on everything that is now priced into into these shares, because they've gone up since those April lows almost 50%.
Larry, let me get over to you here. The stock has underperformed in July. Any concern or red flag on your part there ahead of earnings?
No, that's part of the rotation that I discussed that started on July 1st. The chart that you just put up showed a sharp pullback in Netflix on July 1st. And we saw that with quite a few of the high momentum stocks, and money moved into small caps, healthcare, home builders. And I think it's a normal sector rotation. Fund managers have made a lot of money this year in tech and some of these growth stocks. And I think it's a normal rotation to book some gains and then reallocate into underperformers. Netflix is a very strong long-term uptrend. It could always consolidate after nearly a 50% move off the lows, but the long-term trend is very strong.
Yeah, Larry, that's what I'm trying to get at. Is the stock become so priced for perfection, even if Netflix comes out, again beats on earnings, maybe the Street has just continued to incline to sell this name?
That's possible. There's a lot of gains in a stock like Netflix that could be booked. So as a trend follower, I'm going to stay with the weekly trend, which is strong. But a lot of these stocks have had big run-ups. So if there was some profit taking into earnings or after earnings, as long as they stay over the 50-day moving average, it really wouldn't concern me.
Steve, last word to you. Is Netflix perhaps one of the most perfect stocks in the market? They had Squid Games, the finale, drop at the end of the quarter. This is going to be the first full quarter where they raise prices on folks, so their profits should look pretty good. And oh yeah, there's no tariff exposure.
It's certainly been a beneficiary for all the reasons you've suggested, and Inez and Larry both made great points about like the year-to-date performance and also sort of the end of the second quarter markup fading as of the 1st of July. But I do think, it's proven to be a very price inelastic stock. I know that I've tried to cancel it, and my wife and kids have revolted
Can't cancel
every time
Netflix,
I've tried
Steve. What are you doing, man?
I don't watch it. My family does. I watch other stuff. I watch more sports than Netflix. But what ends up happening is they rebelled and said absolutely not. And so I think this company, every time they've tried to do something that people thought might scare off customers, it hasn't. The question now is it priced to perfection, or is it priced beyond perfection? The trends are certainly very strong. It's been a great company, and but as with many things market related, we'll find out when the earnings come out if we've gotten a bit ahead of our skis in terms of expecting another round of perfection. But boy, the market, since the last earnings, the market's really repriced this stock in a very positive way.
All right, let's keep this moving. It's time now for our question of the day, and here it is. Will the June CPI index data out next Tuesday confirm that tariffs are in fact inflationary and there's no need to cut interest rates? Steve, I'm tossing that one over to you. From what I can tell, estimates are that the CPI will have accelerated month over month as companies start to digest more tariffs. Do you think this report will be inflationary? And then could it remove the potential for a rate cut?
I do think that it's showing some modest inflation. I think the sort of the easy work on inflation has been done, and I think it's kind of incremental, and the tariffs work against that. We still, the problem here with tariffs, and this is what Powell keeps reiterating, is we don't know, and we can't know because the numbers keep changing. They're implied that they're going higher until we really see how they're going to be baked in. Well, first of all, what the numbers will be, and then secondly, how they'll be baked in and who will bear the brunt of them. Will companies bear it indefinitely? I think in the initial phase, you didn't have companies passing on a lot of the tariff effects. So this is very much a moving target, and this is why I'm not a big believer in Fed rate cuts coming down the pipe. Certainly, we've priced them out for July. The market has, and I think the market somewhat priced them out for September, for being a dead certainty to less of a certainty. And I think right now, we're going to have to see across a range of functions that whether this trend of, let's say 2.5 below 3% inflation persists, or whether you start to see numbers like that 0.3 that's expected. When you annualize that annualizes out over 3. And I think there's too much uncertainty for the Fed to really move. Now, there are some Fed governors who I think are angling for Jerome Powell's job starting next year. So I think you're getting some more vocal calls for rate cuts because I think they want to, they're playing to a specific audience here. But in general, I think there's not enough momentum here, not enough clarity for the Fed to do anything other than stay on the sidelines until we actually know what's going down.
Larry, core CPI next week comes in ahead of expectations. What's the market reaction?
I think there's a pullback, and I think it creates volatility. What happens is the market's gotten a little bit complacent with inflation. There's been a lot of calls for Fed rate cuts, but inflation's still above the Fed target. So inflation's above the Fed target. The jobs market's very strong. The Fed has no reason to cut rates yet. And I think the caution point that we need to be aware of is if the CPI comes in as forecast on your chart, I think it really takes out the chances of a September Fed rate cut, and then it creates some volatility in the market. So I would expect a pullback in the S&P 500 if CPI comes in as forecast.
And as last word too, you've been tracking a lot of these soft commodities. I'm very curious on how they start to play out in these CPI reports.
Yeah, I mean, in this CPI report that's coming up, we may see the volatility in oil that happened last month translate into the report. But look, going forward, you do have the street that's saying that oil is supposed to go down. Okay, that's one thing. But then you've got the industrial metals that we talked about, and those have been going higher. And if you put a 50% tariff on copper, what's that going to do to prices of pretty much everything? I mean, data centers, the grid, everything that you're trying to onshore, factories, that is going to raise prices to do any of those initiatives.
Well said. Big thank you to my contributors today. Have a great weekend, y'all. Good to see you. Trading day is underway, and like I always say, every second matters in investing. What you do now could determine your financial future. So here's the one forward-looking indicator I want you to think on this weekend. If someone is telling you stock valuations don't matter right now because everything in the market is rising, don't listen to them. Stock valuations do matter. And if you think they don't matter, realize you are being sucked into the hype balloon, and these balloons all eventually pop. Do better. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. Do stick around.